We are edging on autumn here on Wall Street, and joining me just in time is Stephen Guilfoyle, president of Sarge 986. Sarge, don't you love this time of the year? It makes you want to buy some school supplies.
I love every day that I'm on this side of the dirt.
Awesome, Stephen. Great answer. Well, September is Apple season, and yesterday the company at least disappointed investors with their new iPhone X release date and price, kind of shook markets off of their fresh record highs. So would you say Apple is its own entity at this point because it's a product release, or could it cause further damage into the market?
Well, Apple is the number one consumer electronic brand in the world. Actually, I bought some Apple this morning, even though I was already long the shares at a lower price, and I very rarely average up. But I figured on this dip, off of yesterday's presentation, I figured it's probably a pretty good time to get involved. And I mean, you never know about these things, but the way I see Apple is with this very expensive offering of the iPhone X, they're not really trying to draw. Yes, they want people to go out and spend $1,000 on a phone, but what they're trying to do is steer the lower and the middle class toward the iWatch, because the iWatch has not performed all that well. And the phones are driving 55% of Apple's revenue. So why not, if you're Tim Cook, why not broaden yourself just for your own preservation? Why not try to steer people toward this iWatch that is no longer going to be tethered to a phone? This way, with a broader product line, you're probably going to do even better than you've done in the past, which is why I bought some more shares.
Oh, that's awesome. Well, my Apple Watch is not performing well today because it's not charged, but I put it on just because in your note you said people should wear their watches.
Well, Mom always said.
Got to listen to Mom. But one thing that this market shows is resilience. It's definitely performing well, considering that September is usually a gloomy month. So what's giving investors this courage to continue putting money into the stock market?
Well, September is towards the end of the government's fiscal year. Except this year, the president reached across the aisle. He made a deal. Well, a deal till the end of December anyway. So he pushed out the debt ceiling argument for a little while. And I think that people expect some kind of, maybe a little handshake there, maybe some kind of tit for tat, if you will. Maybe Nancy Pelosi or Chuck Schumer votes for something he wants now that he kind of gave in to them on an item. So maybe this actually gives a push to tax reform. So between that push out and the sudden renewal of the idea of tax reform, which you've seen the reemergence of the the Russell 2000 over the last few weeks, this becomes a very interesting argument. Plus, let's face it, we're going to spend a lot of money, no matter what. Even the fiscal conservatives, which I usually am one, have to admit that in the wake of two horrible storms and the undoubted need for increased military spending, we are going to spend. It's going to be a fiscal stimulus, whether it's labeled that way or not.
So you like Trump's angle with the agenda now, because that's what's originally taken us on this run in the first place.
I like the fact that he is suddenly showing a willingness to get something done, even if it means crossing the aisle. He has never been a conservative guy. He's been a Democrat most of his life. So, and as a businessman, you're used to finding what works. That's what you do. He doesn't seem like an ideological guy to a lot of people. So if he makes friends with the people you wouldn't think a Republican president might make friends with, or at least deals with, who cares? Let's get the ball rolling. Let's cut these taxes. Let's be competitive. Let's get aggressive.
All right. Well, like you said, that is what's helping the backbone, letting buyers step in. Now, last I talked to you, you mentioned there are some speculative stock picks that you couldn't tell us before. Can you mention them now?
It's hard to remember what I was thinking of last time.
I mean, obviously you had the risk on motion. You think that stocks are continuing to go up. So what are your picks then?
Well, my picks right now are something that you might want to look at in the wake of rebuilding. All right, so you're going to look at your Owens Corning, your Weyerhaeuser. They sell timber, they sell roofing materials, they sell insulation. Valero, which is the refiner that got by with maybe the least amount of damage in the Gulf of Mexico. These are the stocks I'm putting money in. I'm not telling you to put your money anywhere, but this is where I'm putting my money, as I know from living on Long Island that rebuilding after a storm takes years. These stocks are going to see the need for their services, and Home Depot, I'm also long, by the way, their need for their services is going to go on and on. I don't think even though you've missed the initial move, I don't think it's too late.
All right, well, just finishing up real quick, there has to be a number in the back of your mind that you would call a top, Sarge. Do you have one?
A top? I don't.
Yeah, top of the market.
I do think that we are going to be more volatile going forward in the equity space. I wouldn't be surprised to see a 5% pullback. We haven't even seen a 1% pullback, right? Yeah. I wouldn't be surprised to see a 5% pullback. But a top, you're not going to see a top for a while. I think that you want to be long this market. I am net long. I'm long more different stocks than I've been at any point in my life right now. I have more money tied up in stocks than I usually do. I could be wrong. I'm not telling you, once again, I don't want to get in trouble. I don't want somebody to say, oh, Sarge lost me a lot of money. If I did, that means I lost a lot of money, okay? I think we are positioned to go higher going forward. I think that we will definitely hit some troubled spots where you're going to have a gut check, say, oh, what should I do? And you might get shaken out. Some people will get shaken out. But I think the next 6 months are going to be very exciting, and you want to be net long.
Wow. All right, guys, so did I answer all your burning question for Stephen Guilfoyle? If not, you can check him out yourself. He has a Twitter, Sarge986, where you can check out his market recon and tons of other goodies. Stephen, as always, thank you so much, my friend.
Thank you, Vozzy.